Hello, everyone. This is gonna be a one-take session. No edits, no cuts, off the cuff. So the thing that I want to talk about now is the CNBC special with the documentary thing, about Ryan Cohen and GameStop in general. The overall documentary was mostly just ads. That's what I felt like. But the overall story is a consensus is like, uh, investor beware. This guy is a rug puller, and that's basically it. That's the general story direction of what they're talking about. We obviously had like, people who held up their end of the story to defend GameStop, which is like, Larry Chang literally was holding the ground for that one, because a lot of the people who were, former employees, like the VP, and also the telecom, engineer, like their kind of sentiment was more or less like crazy stuff happened, but there was like little or no substance into what they're talking about. The only people that really had substance was mainly Larry Chang. Everyone else had like these weird insights, like especially the Reddit guys. The Reddit guy, especially like the guy in a gray sweater, like this was so weird. Like, why are you inviting these guys? They're not like they're not their interview skills and their answers was like very very bad in my opinion. Well, I wouldn't say very bad. I would say it wasn't eloquent and it wasn't um, well delivered, uh, compared to other people that I know who is in GameStop, right? Like, why? Where's my interview? No, I'm just kidding. Don't worry about that. I don't need an interview. But I want to address the one thing the, that everyone should know. CNBC in the market is not efficient. Okay, and I want to say this reason because, for example, everyone thinks they know what Apple is, but year over year, they have been proven wrong multiple times. Everyone thinks it's baked in. Same thing with Costco. Same thing with Chipotle. These are the same guys that you choose to believe as your source of information to talk about GameStop. Okay, and I want that context to be clear, right? These guys who are reading into it day to day as a trade, not a business operations. Because as a value investor like myself, I look in the value of the company, right? I'm not looking for day to day swings at all. These guys look for swings, right? Because they have an obligation to meet a certain criteria to make sure that they pay out to their, investors that invest into their firm. So I want everyone to understand that these guys play a different game. Retail plays a different game. They're completely two different separate worlds, right? But with that being said, these retailers are also trying to play their game when you should not be playing to play their game. You should be looking at like, what are you getting yourself into? And for example, I'm getting into GameStop because of their operations efficiency. Where are they going operationally speaking? The fact that there's a huge focus on their their e-commerce presence is very important, and I find that very important compared because comparatively speaking, uh, people are not going into these places uh, as often because they only need to go when they need to go, kind of deal, right? So with the e-commerce enablement, it allows them to vertically integrate into another system that I want to talk about. I want to talk about vertical integration in this entire video. So the whole point of vertical integration about GameStop compared to other competitors, they have a very strong edge. And for example, so when they are selling a game, right? They'll understand your search history over time, and as they integrate more things that can help their platform, they'll obviously integrate like, hey, I see you like playing games on PC. They're obviously going to push the player game launcher app on the side somewhere in the banner on their website. Most likely what's going to happen, right? Or somewhere. And they're they're constantly improving their way to integrate you into the system. So once they got you playing into the game, right, they're gonna focus on thinking about, okay, so now that we have your search history over time, let's integrate you with other products that we have high margins on that we think you're interested in. For example, the Web3 thing. Okay, so it is a meme that people always talk about, but there is a reality to it. So the reality to it is, for example, when you start seeing these developers getting into Web3, and the thing is, this is a very long term play. In my eyes, this is not going to play out until 10 years. And the reason why I choose 10 years from this point on and moving forward is because it takes that much time for some kind of game that will pull like a like a huge traction that makes people want to play that Web3 game. Because right now, public sentiment for Web3 games overall is bad, and public sentiment is very important when it comes to value investing into a company of the company's narrative, right? So like right now, I am playing these products too. There is a couple good games that I have been playing myself that I can see myself of seeing people like playing the game. Also, I'm wearing a GameStop shirt. I forgot to show that because my scarf is in the way. So, anyways, um, most importantly, that vertical integration, right? They have a competitive advantage over other guys because they have. It's like, think about Amazon, right? If you think Amazon, the way they approach it is they have a strong ad presence is because they know what you're searching for, so they have relative products. Same thing with GameStop. If they have a collectible related to the games you're always constantly buying, like let's say like, oh, this guy's search history is all about Nintendo stuff. Let's put Nintendo collectibles on an ad on a side on their website. So if you think about it, GameStop is also an advertising company for the gaming slash hobby culture. It is a very uh, strong pull on the new consumers of gamers now, because the new consumers gamer is like a culture at this point. It's no longer just like underground gremlins living in mom's basement playing games all day, and the only thing they want to see is video games at the store. No, it's actually a lifestyle now, and that's the thing I really like about GameStop's approach. Is Brian Cohen's focusing on more of like the culture of the gaming industry and vertically integrating it into a face of merchandise, right? Because a lot of people rather have purchased official merchandise than like, some bootleg stuff from another company and then realizing this is not official products. Whereas uh GameStop has that face value that other brands like, developers that want to see like, you know what, I want to work with GameStop, and they probably have connections to make t-shirts and stuff like that, and then I'm going to integrate my volume of t-shirts and make a deal with them. It's like, hey, print this many t-shirts because it's going to be pushed out to a third party, and be like, hey, I want this many shirts at your store, blah 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 blah. Well, not particular store, but they'll say GameStop like, we want these many shirts. We'll buy these shirts and we'll let you sell it, but we'll, like that kind of stuff, like that royalty, right? It's a licensing royalty. Well, it doesn't have to be the developer. It could be actually GameStop reaching out to the developers and be like, hey, we want to promote your game. We want your license. Purchase the license, print the shirts, high margin. There you go. There you got your margin right there. So that's an example right there. And then once you start getting these people getting on your platform more and more often, right? Then you can also integrate it to their newsletter as well. They have Game Informer, right? So they can put products, again, more product placement. Product placement is very important on the new GameStop website for like pushing their stuff. So that's vertical integration, and they can start pushing. That's where the NFTs can kind of come in a little bit more over time, because once there is like a strong attraction for like the collectible stuff, the hard like physical stuff, they can like maybe find ties with certain NFT creators with a physical attachment with also a online presence as well, and integrate that. So there's a huge integration with all this, and all GameStop has to do with all those is become a toll booth, and that's where I'm looking at. I want GameStop to be a toll booth company, where all these developers and all these indie developers who want these like future potential merchandise physically at the stores to promote their game can start getting into right now. Because if you think about it, GameStop could be like the next like face of platform for indie developers. Go directly to GameStop and do these licenses that they're like, okay, we have this license. We want to work with you with this license, and we want to sell this, right? And there's a whole lot of steps that can happen with that. But at the same time, for a bear case that people are looking at, they are still looking at as physically it's just a legacy store, right? And I can understand that. But at the same time, you also have to put in the lens of everyone else, of other legacy stores, how they're operating, right? So I don't just look at just GameStop. I'm looking at their neighbors. Their neighbors in this case would be Target, not doing so hot. Best Buy, doing okay. And Walmart, right? And all these retailers, there's one thing in common that is a public negative sentiment right now for shareholders, which is burglary. And I want people to really understand this because like people getting robbed, I mean their stores getting robbed is like their biggest excuse right now. Which makes like retail in general, public sentiment wise, very negative, right? So everyone who posted their quarter earnings prior to GameStop will paint GameStop an image of legacy retailer with also problems with break-ins and everything like that. And the only reason why I'm bringing this up is because when you are in a sector, let's say you're in technology, right? If Apple was reporting earnings after CrowdStrike, for example, or for example, if CrowdStrike was also posting earnings before Amazon and they showed negative, then Amazon and Apple will have some wavering with their price action because they showed negative quarter earnings. That means we need to get out of these right now because everyone's hyped up. And once they show negative earnings, pulled. And the reason why I can say that is because if you look at here, sorry, this is GameStop, but if you look at let's see, Diamonds, Apple, right? This is Apple right now. So once people realize what they showed recently, this is post Apple demonstration demo. The public just find it very underwhelming. The public demonstrations for their new product lines, right? And investors were very underwhelmed. And you know what? They're seeing no new improvements, especially the iPad. There wasn't any improvements on that. They have this super expensive goggle, and there's nothing innovative with the phone. I don't think people realize what was actually important, which in my opinion was the messaging app doing stickers, freeform reactions. And I think that's really important as an investor to realize this, is because the new generation of kids love their memes. They love their GIFs. Being able to control your emojis and reacting to your conversations in free form is highly valued to the customer. Unironically, very valuable because it's fun, right? They're making messaging really fun. And people have rumored that new phone that's coming out in September this year will be using Type-C cords. So they're going away from the Thunderbolt and integrating that kind of format. So this new phone they're coming out is rumored to be the next flagship of because their flagship is iPhone X, right? That's their big poster child right now. 15 is basically going to be that new poster child. And I think people don't realize this is because they're looking at only at how lackluster of the upgrades on all their hardware. And people need to realize this. As a investor, I'm not looking at those things. I'm looking what is increasing value to the customer. And I think the value increasing the customer was definitely the messaging app process. And I think there's going to be a huge play on that new development on that end. So there's that. And also the push for, people using Safari and stuff like that. Like those are great. But the thing that really highlighted me was definitely the new messaging app experience. And I think that's going to be very exciting. So anyways, I digress from this segment. In terms of GameStop, it's the same thing, right? People think they already know what the company is when there is so much room for vertical integration into an ecosystem that is specifically very tailored to gamers and the hobby culture in general. Like, if you think about it, they are selling merchandise from Riot, like League of Legends. Like, for example, I saw a toy sword of Echo. That's like a cosplay thing, right? That's culture related. That's not related to like strictly just gaming. It's just that's a cool thing. I wanna carry around a Echo sword. Like that's an example of what they sell, right? Sure, not all things like sell out immediately, but I've been trying to get a space helmet like related to Star Wars, and they're all sold out. I'm like, okay, I can't even get a space helmet. Like, there's a lot of things they have right in the hobbyist section that has grown over time, that people like my age grow older. Like, sure, we may or may not grow out of games. I definitely did not grow out of games, but some of us do. But some of us value the other things a little bit more now, like the hobby stuff, right? And I don't think people realize that this is a very good ad platform. And that's how I'm looking at it. It's a really nice ad platform. So again, vertical integration. Once people get on the platform, now try to get them to stick to it. And the price increase I heard about the new membership thing. I'm also a GameStop membership, whatever thing, the platinum level, whatever I forgot it's called. I don't have it at the top of my head. I'm just speaking out of my head, but GameStop has very strong pricing power because they are the face of gamer culture, and I think that moat is very important for a specialty retail store like that, competing with giants like Walmart and stuff like that, because those guys are like, they have their own moat, which is Walmart discounted things cheap. Um, Target, I think Target is like the more quality than Walmart is their look, but now it looks like they're kind of questionable. I don't know Target too much, but and Best Buy is basically large appliances. We all know that. You know it, I know it. Everyone who shops for technology in general, like, is the large appliance store. They have like a bunch of everything. They have speakers. They have TVs, which is their main revenue source in my opinion. Computer parts and stuff like that. And GameStop is known as a game retailer outside of the context of what people seeing who hasn't visited a GameStop store in like the last 10 years, right? Because I actually visit frequently when I was younger, and compared to now, completely different company. It is a lifestyle culture of gaming combined with anime and stuff like that. They are integrating the whole hobby as a package, right? And sure, Amazon can be in that market, but they're not that face. They're not the face for that. They're not the default face of that. And I think brand value is very important. That's why the brand value is very important to me as a value investor, because they have this grasp of knowing we are this company. We are the destination point. And that's what Amazon gaming segment will have to compete against. And because Amazon is known for convenience, right? So if somebody want convenience and price action for their product they're buying, they buy it from there. But if people want, like, specifically the hobbies that they don't like, they know where they can get it without having to search like all these third party vendors, because remember, Amazon is third party vendors. These people buy have their products inside their warehouses and deliver to you, whereas GameStop is literally the source. So there is no crazy third party. So you know the quality of the product you're purchasing, and you don't mind the price because it's either in competitive with Amazon or almost no difference, right? So that's what people need to understand. Like, this whole e-commerce push is super important with their integration to get into this system, to get people on board, get their membership and stuff like that. It doesn't have to be memberships either. It could be just the fact that they have a lot of one-off like merchandise. Because I asked about Funko Pops, I didn't know what the hell they were, to be honest. I don't really collect them myself, but the fact that they have limited supply of these products in scarcity, they come out, they rotate these really quickly. Actually, I actually see them sell out quite quickly, even when I was working at Indigo at one point, which is a like the Barnes and Nobles of Canada. Kind of cringe, but yes, they do. They sell Funko Pops, and I see them selling like hotcakes. They have low inventory of them, and they sell out quickly. Same thing with their limited collections of Funko Pops too. People actually resell them. I actually went to Anime North recently, and which is basically an anime convention, and they also resell these Funko Pops. Like, sure, it doesn't go back to GameStop, but the fact that the face value is there gets them off the shelves really quickly. So in terms of sales, I'm not too concerned about that. If anything, they're not gonna make as much sales as Christmas. So if I were to make a trajectory, we're looking at maybe, I'm gonna be conservative, very conservative. If they can retain 10% sales from last quarter, then we're looking at possibly an EPS of maybe, I'm looking between either -10 up to +20. Point 20, like point 20, not 20, but point 20 EPS, right? I'm not looking like a huge swing here, right? But I am more in the camp of they're going to most likely be between point 0.08 to point 0.15 roughly. Almost basically a near flatline EPS. And this is a very, very, very big thing for a retailer, because every single company, including Amazon, I also have shares in Amazon, shows a very poor performance on quarter ones every single fiscal year, because of the huge sale that happens in Christmas, and then after that it becomes like, flaccid. It becomes, they're not making any sales. There's no discounts. Everyone already spent all their money in December. November, October, right? There's not a whole lot of money running around. So it's a new year, fresh start. Try not to spend too crazy, or they already have their spending focused in summer already. They already have their focus like, all right, my next spending is gonna be next year, not the beginning of the year, but like at the end of the year. So take that into in mind. So anyways, long story short, I don't know why I'm rambling for so long, but CNBC definitely wrong about this. Well, not CNBC. Some people inside the with their insight of saying that this is a meme stock, and this company is going nowhere, or this has no fundamental intrinsic value. They're not looking at it correctly. Just like how I said about Apple, just like how I said about uh, Costco, just like how I said about Chipotle. These guys may sound like they know what their stuff is, but let's be real here. They've been proven wrong many, many, many times. It's like a flip of a coin. There'll be days where they're right, and there'll be days where they're wrong, right? And these people don't live these stocks. They have a whole bunch of things to look at, right? Whereas for you, you can specialize as the viewer, as the retailer. You can specialize on certain industries and do very well and beat the S&P 500. And also, I need to show my shares before I end this recording. Hold on, let me pull, because I forgot that I'm doing a weekly update of my purchases. Hold on. No edits, no cuts, off the cuff. But anyways, that is my rant for the day. That's basically what happened. That's how I reacted. It was a very odd piece, to be honest. I think that piece was more focused on like, we need to make money right now, and that's what they did. They made money off ad placements, right? They made a lot of ads for their programs, a lot of ads for car companies, which is, in my opinion, hurting right now because they're not making a whole lot of sales. It's not like all-time highs or anything like that. If anything, the reason why, if they are hitting all-time highs, is because they lower their prices, which means like their cost of business is going down. So let's share my screen here. Hold on. Let me see here. Nope. There we go. Yes. So we are 6% plus on my last month, but I'm all-time 2% above average. Again, this portfolio is trying to beat the S&P 500. Right now, my Amazon and my CP are hurting right now, and my GME is going up by 5% end of day. I made a purchase of $25 Canadian again. I want to emphasize the whole point of me showing this is to you as an investor have to do your DD and know what you're doing with your money, right? And for every single person that says like, man, I'm going to buy the dip, the amount of time and headache to constantly look at the chart on a day-to-day basis, like how are you supposed to predict this? Like, you're telling me you are a homebody investor. Well, not homebody investor. You as a retail investor think you can play the game like this, right? You watch this all day. Like, I'm looking at the 4-hour chart. Like, this is what your day-to-day looks like. This is the day-to-day, right? Could you predict this day-to-day? And that's what I don't stress about myself doing. I rather just dollar cost average in and make my decisions based on the lifestyle that I choose, which is basically, I know what the intrinsic value is. I'm calculating it based on operations. That's how I do it as a value investor. I'm basing it on operation efficiency, and also the moat, and also where it stands in the whole world market, okay? And I think people need to understand this. GameStop is not just competing those stores. The products they're selling is competing with time. And I want to really emphasize this. The gaming industry is booming is because people find value in that industry. Because once they consume the game, they'll constantly keep consuming, and it's like infinity pool of hours collected to it at a, if you think about it, a very low price compared to other luxuries, right? For example, if I were to compare like Netflix, for example, right? GameStop is indirectly competing with Netflix is because the products that like the video games, right, are competing directly with Netflix. So GameStop is not directly competing in the entertainment industry by any means, but the products they're selling are competing in that industry. So like, so there is like some very like crazy nuance that I kind of keep in my head, realizing, remember, this company is not only competing in sales and stuff like that as a e-commerce, but like also once they start pushing out their platform, they the and the things that they carry, the things they carry are going to be competing against um other products that consumes people's time, right? And that's where the real competition when it comes to selling these products is whose time and what product gives them more value for what they can consume. Because that's how I look at it as a consumer, right? I want to choose what is best for my time, used for my time. Because remember, I'm using my time to purchase this thing. I better find value into this purchase, and that's why I'm super happy with the approach of like hobby things like Funko Pops, lightsabers. All these kind of products are really great because it's getting away from just video games. Because if they just sold video games, right, that means people are focusing more of like how much time can I get out of this and is it valuable when I finish playing the game versus as to having a in live experience at Vegas, for example, right? Just really very general like examples like or Netflix. Like I'm gonna spend $13 every month, $15, $18 every month on a Netflix membership, and I'll get all my value by just watching 3 or 4 episodes of some kind of television show, for example, right? That's the kind of competition that uh, video games have to compete, right? Like how can we get the consumer value with all these because gaming is expensive. Let's be real here. It's a luxury um, time consumption. Even though I want to say expensive, but at the same time, unironically, it's not expensive if you have a job. It's I know it's a strange thing, but the thing is, like, also the demographic for video games is also small. So free. That's why free to play is huge. I'm going on a rant now, but I'm gonna close it off. Basically, CNBC documentary was weird. Will it affect the price? I don't think so because it was kind of all over the place. It wasn't. There was a narrative of, if anything, the consistent narrative would be Ryan Cohen is a rug puller, GameStop is a meme. There's no intrinsic value of the company. That's how it ended. That's how it closed. That's the punchline because it began off praising him, then it finished off roasting him. So I think people are gonna remember the roasting part because it was the punchline of their program. So they're gonna be wrong on this one because on a long-term basis, what I can see, they have a strong vertical integration of making customers to constantly come back because they're gonna have a strong ad program in the future. And the reason why I say that is because they know what you're searching for, they know what to sell you, they have all this data that they don't need to talk about. So stop trying to do horoscopes with Ryan Cohen because at face value, he's just a guy who's telling to Matt Furlong, and I think people need to realize this. Matt Furlong is amazing because he's the same guy that worked at Amazon, so he knows, he's been here before. He knows how to operate this. He knows how to transition this. He's seen it all. So I really want to praise Matt Furlong on this, rather than just talking about Ryan Cohen all the time. I think people need to realize that this guy, he knows his stuff in terms of operations, right? He knows what to execute, where he needs to put focus on, right? Ryan Cohen is just if anything, he's, in my opinion, just an advisor. He's not directly. He may have direct influence to what Matt Furlong should focus on, but remember, this is a two-way street. They communicate on a two-way street because Ryan Cohen has something to bring on the table. So does Matt Furlong as well, right? I don't know what other boards how they put in their input, but if we're gonna put for pound, I want the people to realize that this is a two-way street. This isn't one way, right? Matt Furlong will also most likely advise like what Ryan Cohen should look at too, because remember, this guy's young as well. He made Chewy what it is today and sold to Amazon, but remember, this is a two-way street. They're trying to, restructure a legacy company with incredibly strong brand value and capitalizing on it. And in my opinion, this is a very good ride. I don't think we're gonna see any material result until maybe 5 years ahead later, which is a long-term investment in my opinion. So I'm not looking for short-term gains, right? If you're looking for short-term price action, you're you're looking at this, okay? You're looking at this. This is not what I play, okay? I play with balance sheets and I just buy it because I like it, because I know where it's going. That's how I purchase. I don't purchase on what I feel what the company should be priced at. I price it based on what is the brand value, what is the moat, what is the operation, what are they bringing to the customer. That's how I invest. Not none of this nonsense of it should be this price because I say so. Great, but also, people may want this, but people want dividends. Personally, I don't want GameStop to actually do a dividend. If anything, they should do a buyback. I the reason why I say that is because I rather have the company take ownership of the like with their shares, increasing my value as an investor, and that's in it already. In shrinking that share amount to increase the price intrinsically. I know dividends are great and all, but that doesn't help. That doesn't. I mean, it kind of helps people out, but I don't want to see that. I'd rather have increase of my appreciation of my capital and my stakeholdership of the company versus of a small little dividend here and there. Because like dividends is great and all, but I didn't join GME for a dividend. I joined it for the cash flow that I am seeing in the future because I want them to become a toll booth company like Apple, like taking revenue based on the game developers that join the program and every single transaction that happens. That's why they picked up Immutable X and those guys, is because I want that toll booth company value to realize in the future. And that's something that I will not see until maybe 10 years. That's like a 10-year plan. And the reason why I say 10 years is because that's enough timeline to have games mature over time and developed onto the blockchain and stuff like that, and have enough transactions, not transactions, enough game, just really good games. That's why I just want to see good games. I don't care if it's an NFT or whatever related, but as long as it's a good game, I'm happy, because that comes first. Good games come first before the NFT value, right? NFT value is great and all, but game developers and gamers want to play a game. NFTs are great, but that's not like the real value of, in my eyes, for a gamer. A real gamer plays a game, and it stays popular because it's a good game. Now add NFTs on top of it, okay, that's great. That's like basically a microtransaction, the MTX essentially. So again, if GameStop were to do anything with their cash flow, I definitely want to see a buyback program, a potential buyback program. Because once they start going through that positive cash flow and a cash flow like stream, then GameStop literally, if it constantly has that strong cash flow, they have pricing power, which means as much retail investor says, oh, we're the ones that save the company can save itself at this point. If they can constantly show cash flow, that means they have pricing power. And the reason why I can say this is because that's what Apple is. Okay? I want people to realize this. Apple has enough cash flow to constantly buy back their company, increasing value, my stakeholdership. And that's why I'm with those guys, right? Because they have a strong moat, they know what to do with their cash, and they still have an abundance of cash. And they're like, you know what? Let's reward their shareholders by increasing their value by buying our own shares. That's what I want to see, right? So maybe this is a contrarian view of things, but I personally do want to see a dividend. I want to see more like a buyback program or a new R&D development of, oh, well, maybe not this quarter, but maybe quarters later on, about a new R&D like research approach to find more revenue streams. Because in my opinion, GameStop is gonna be definitely a new ad platform. Just gonna be like Amazon, because there's gonna be a lot of people searching, and they're gonna have a lot of search history. They have a lot of integration that way. Then bring people in and promotes their player platform. There's a lot of things that I can see. So that's my rant. All right, power to the players.